Welcome to the Merging Life and Money Show, the live podcast dedicated to helping professional women achieve financial wellness by merging the emotional and the practical sides of money. I am your host, Marie-Jo César, and today I will dive deep into the world of personal finance with the first episode of my new 4-part live podcast series, Navigating the Complex World of Money. I will be talking about understanding, planning, and investing your finances. This enlightening journey is designed to help both beginners and seasoned individuals better understand the many facets of managing money. I understand that the world of finances can be intimidating and seemingly complex. It's like walking through a maze with several turns and dead ends, but it doesn't have to be that way. I also believe that with the right tools, the right information, and the right advice, anyone can successfully navigate their way through this labyrinth and come out victorious. Whether you are starting out with your first paycheck or have been managing finances for years, I am here to help and aim to provide comprehensive information to support you in making wise financial decisions, ensuring your hard-earned money is put to good use. So from the building blocks of financial success to stepping into the investment arena, I've got you covered. So welcome to the Merging Life and Money Show. I come to you live every Thursday at 7 p.m. Pacific Standard Time to share skills, knowledge, motivation, and the enthusiasm you need to achieve financial wellness and live your life with means and meaning. So sit back, relax, grab a pen and notebook, and get ready to take some notes. So let's get into it. In this kickoff episode, I will be diving deep into 3 pivotal elements that lay the foundation of a prosperous financial journey. First, I will start by understanding the basics of money. I will demystify complex financial terms and concepts, helping you comprehend the fundamental principles that govern the world of finance. This knowledge is a building block that will allow you to manage your money more effectively and make informed decisions that will impact your future. The second point of discussion will be creating a solid financial plan. I will explore how to craft a comprehensive plan that maps out your financial journey. I will delve into the importance of budgeting, the need for an emergency fund, setting financial goals, and tracking your progress. These elements are essential in guiding you toward financial stability and success. And finally, I will delve into exploring investment strategies for success. Here, I will aim to shed light on different investment avenues and how to select the right strategy based on your goals, risk tolerance, and time horizon. Investing can be a powerful tool for wealth creation, and I will guide you through the initial steps of venturing into the world of investments. This episode promises to be a transformative journey, equipping you with the knowledge and tools needed to navigate the intricate world of money. Now that I have laid out the structure of the first episode, let's transition into the first main topic, which is understanding the basics of money. This is where we strip down the complexities of the financial world and get back to basics, laying a strong foundation on which to build our financial future. All right, let's give the show some context then. You're about to embark on an exciting journey to grasp the complex world of money and turn it into a friendly neighborhood, something you can navigate effortlessly. You want to be in control of your financial destiny, making your money work for you, not the other way around. You would want to have a future where you understand how your financial decisions today will shape your tomorrow. This is more than just crunching numbers, guys. It's about changing the way you view and handle your money. It's about sparking a transformation from within. In this episode, I will get up close and personal with the basic building blocks of money. I will go back to the very beginning, step by step, unraveling the nuts, simplifying the jargon, and providing you with the tools you need to make sound financial decisions. You are not just a passenger on this journey, okay? You are in the driver's seat. And trust me, once you grasp these basics, the road to financial freedom will seem less winding and more direct. So let's dive into the fascinating world of money. Managing finances can be quite daunting, especially for those just starting out. However, with a few basic tips and tricks, anyone can easily navigate the complexities of finance and make wiser decisions that will bring them greater benefits in the long run. Why is understanding money basics so crucial? First, it empowers you to make informed financial decisions, right? Ever find yourself pondering whether to save, spend, or invest your money? Well, knowing the basics helps you answer these questions. It guides you in setting financial goals and figuring out the steps to reach them. Second, it helps you to navigate the complexities of the financial world. Let's face it, money can be confusing, right? Interest rate, investments, taxes, but with a firm grasp of the basics, you won't just survive in this world, you will thrive. And lastly, it prepares you for life's unexpected turns. Life has a way of throwing curveballs, doesn't it? And often these curveballs involve money. With a solid understanding of money basics, you will be better equipped to deal with this situation. One important step is setting a budget, both short term, like weekly spending limits, as well as long term, saving up for future purchases or retirement. Budgeting is like the GPS of your financial journey. It's your guide, your roadmap. Without it, you might find yourself lost in the wilderness of debts and financial stress. And with it, you can navigate your way to financial health and success. Also, budgeting helps you to identify your income, track your expenses, and ensure that the former is always greater than the latter. It's like putting a leash on your spending to keep it under control. It ensures you have enough for your needs, a little for your wants, and some savings tucked away for emergencies or future goals. But here's something I want you to remember. Budgeting is not about depriving yourself of all the fun things in life. No, it's about making thoughtful decisions about your money. It's about understanding what's truly important to you and prioritizing those things. So why not give budgeting a try? It might be a bit daunting at first, right? But believe me, once you get the hang of it, you will wonder how you ever managed without it. Additionally, tracking expenses helps identify where you may have gone overboard when it comes to expenditure, so corrective measures could be taken if needed. That is why spending within your means is such a big deal. Let's look at it this way. Spending more money than you earn is like swimming against the current. It is possible, yes, but it is exhausting and you will not get very far either. On the other hand, spending within your means is like swimming with the current. It's easier and you can go much further. After all, who doesn't want to have their financial housing in order? Trust me, you have got this. Apart from proper budgeting, another essential part involves smart investing, which includes researching different strategies such as stocks, bonds, mutual funds, etc. The world of investment can seem like a labyrinth at first, with its multitude of options and all the jargon. But believe me, with a little patience and curiosity, you can find your way and reap the rewards. Investments are like seeds. You plant them today, nurture them with care, and over time, they grow and give you a bountiful harvest. There are various kinds of investment options, each with its own risk and reward profile. So let's start with stocks. These are shares in a company. When you buy stocks, you essentially become a part owner of the company. The price of the stock depends on how well the company is doing. Stocks can give high returns, but they can also be risky. Bonds are another option. When you buy a bond, you are basically lending money to the government or a company. In return, they promise to pay you back with interest. Bonds are generally less risky than stocks, but the returns are also lower. Because they are a collection of stocks, bonds, and other assets. They are managed by professionals and are a great option if you are just starting out or don't have the time to manage your investment yourself. Then there are options like real estate, commodities, and more. And I would be remiss if I didn't mention cryptocurrencies. These are a modern and often volatile addition to the investment landscape. They are decentralized digital assets that leverage blockchain technology for secure transactions. So cryptos like Bitcoin, Ethereum, and many others have gained significant attention due to their potential for high returns. However, they come with a unique set of risks, including regulatory uncertainty and price volatility. So if you choose to explore this area, do so with caution and consider it a part of a diversified investment strategy. Never invest more than you can afford to lose. Remember, thorough research and understanding are crucial before diving into the world of cryptocurrencies. The key is to familiarize yourself with these options, okay? Do your research, understand the risks and rewards, and make informed decisions. Investing isn't a get-rich-quick scheme. It is a long-term game. It's about being patient, persistent, and disciplined. And it's about diversifying your portfolio to spread your risk. So I encourage you to take that step into the investment world. Start small if you need to. Remember, it is not about making the perfect move. It's about making a move and learning along the way. And as you gain experience and confidence, you can take on more complex investment options. Remember, you are not alone in this journey. There are plenty of resources out there to help you. You can do this. Okay? It's time to let your money work for you, not the other way around. Now, let's talk about a topic that often gets groans and sighs. And that topic is taxes. Yes, you heard right, taxes. They are not the most exciting part of your financial planning, are they? But here is the thing. They play a monumental role, and the sooner you understand this, the better off you'll be. Picture this. You have created a budget. You've started investing, you're doing everything right, but then tax season rolls around. And suddenly you are slapped with a huge tax bill that sends your meticulously planned budget into a tailspin. Not a great feeling, right? That's why understanding taxes is so crucial. Taxes can have a significant impact on your net income and overall wealth. If you don't factor them into your financial planning, you are essentially navigating through your financial journey with a blindfold on, and you don't want this. It is crucial to understand different types of taxes. They come in different flavors: income tax, capital gain tax, estate tax, to name a few. And how they apply to your situation, you got to understand it. Planning for taxes can lead to strategies that maximize your tax liability and maximizing your after-tax wealth. For example, certain investments offer tax advantages. Retirement accounts like 401ks and IRAs, for instance, provide tax-deferred or even tax-free growth. Additionally, there are tax credits and deductions you might qualify for that can significantly reduce your tax bill. So understanding taxes is not the most exciting part of your financial journey, I get it. But it's one of those things where a little bit of knowledge can go a long way. And remember, when in doubt, it is always a good idea to consult with a tax professional. They can provide guidance tailored to your specific circumstances and help you make the most of your money tax-wise. At the end of the day, understanding the basics of money empowers you to make informed financial decisions and guides you in setting financial goals and figuring out the steps to reach them. All right. Now that we've built our foundation with the basics of money, it is time to transition into something a tad more intricate, yet exceptionally vital. The second point of today's episode: creating a solid financial plan. Having a strong understanding of money is a fantastic start, but it's just that, a start. You need a roadmap that lays out your financial goals, guides your decisions, and helps you make the most of your money. That's where a solid financial plan comes in. A financial plan is not just a budget or a list of investment choices. It is a comprehensive strategy that takes into account your current financial situation, your future goals, and the steps you need to take to get there. It involves saving, investing, insurance, taxes, and more. A solid financial plan is like a GPS for your financial journey, providing direction and helping you navigate even when the road gets bumpy. So let's dive into the exciting and rewarding process of creating a solid financial plan. All right. Why is it crucial to have a financial plan? Money, like anything else in life, does not come with a manual. It can be unpredictable and sometimes downright perplexing. So you might be wondering, why then would you need a financial plan? Let's start with a simple analogy. Imagine you are on a journey. You wouldn't set out without a map or a GPS, right? In the same way, a financial plan is your roadmap to financial security and prosperity. It provides clarity, sets out your goals, and lays down the steps to achieve them. And believe me, it is immensely satisfying to see your financial goals materialize because of careful planning and disciplined action. A solid financial plan is also your safety net during turbulent times. Think of it as an umbrella that keeps you dry during a financial storm. It gives you control over your finances, and with that control comes peace of mind. You are no longer at the mercy of unexpected expenses or market fluctuations because you've planned ahead. So, you see, creating a solid financial plan is not just about the numbers on a spreadsheet. It's about carving out your path to financial independence and stability. It's about empowering yourself to make informed decisions that will benefit you in the long run. I would even go as far as to say it's one of the most important steps you can take towards securing your financial future. Now, isn't that a persuasive reason to start planning today? Okay, let's dive deeper into the creation of your solid financial plan. The first step is something that might feel a bit like stepping on a scale after a holiday season, evaluating your current financial status. I know it might sound a little scale, right? But just as with the scale, acknowledging the current situation is crucial. It's where your journey begins. You have to really understand your income, your spending, your savings, and your debts. Are there more debts than savings? Are there purchases you cannot explain? That's perfectly all right. You are not the first one, and you will not be the last one. But now it's time to take control. This might feel overwhelming, confusing even. But don't worry. Remember, you are doing this for you, for your peace of mind, and for your future. Now, once you have had a look at where you stand, the next step is creating an emergency fund. Imagine this fund as a comfy financial cushion that allows you to land softly if life pushes you off balance, your car breaks down, your roof starts leaking, or an unexpected medical bill comes your way. Your emergency fund is there to catch you. It provides you with the financial resilience to handle life's surprises without having to dive into debt or scramble for funds. This isn't about predicting every potential hiccup in life, but rather about preparing for the unpredictability of life itself. I know it might sound like a challenge to save for something you can't even foresee, but trust me, the first time an unexpected expense come up and you can cover it without stress, you will feel a sense of relief and control that is incredibly empowering. All right. Now that you have evaluated where you stand financially and started to build your emergency fund, it's time to set some goals. Here is where it gets fun and a bit tricky at the same time. Why? Because your financial goals should be as unique as you are. And yet, they need to be realistic to make sure they don't just stay as dreams. Imagine you're setting off on a road trip. You wouldn't just get in a car without a destination in mind, right? Well, that's where goal setting comes in. But what's the point of setting a destination that is unattainable? For example, saying that you want to visit Mars by car is just as perplexing as saying you will save $1 million in a year while earning minimum wage. Let me say that. It's okay to dream big, but you need to stay grounded in reality as well. So let's discuss how to set realistic financial goals. Start by thinking about what you want your future to look like. Do you dream of owning a home, traveling the world, starting your own business, or simply retiring early and living comfortably? These are all valid and fantastic goals, but the key is to break them down into achievable steps. Once you've figured out your goals, it's time to create strategies to achieve them. It's like creating a roadmap for your journey. And here, budgeting, saving, and investing play crucial roles. You might need to adjust your spending habits, increase your income, or start investing wisely to grow your wealth. Don't be discouraged if it seems like a long journey. Remember, every long journey starts with a single step, and every dollar saved or invested gets you closer to your goal. Now that you've got your roadmap, it's time to take that journey. And part of that journey involves keeping track of your progress and knowing when to make a U-turn or take a detour. Yeah, you've heard it. You heard it right. Tracking your progress and adjusting your plan as necessary are essential parts of managing your finances. Now, think of your financial plan like a GPS navigation system. It gives you the best route to your destination, but it also keeps track of where you are. It tells you if you are going off course and reroutes you when necessary. So why is this important? Well, it's simple. You don't want to be driving aimlessly, wasting gas, and never reaching your destination. Similarly, regularly tracking your financial progress will allow you to see if you are on track to achieve your goals. So, are your savings growing as expected? Is your debt decreasing? Are your investments performing well? If you are not on track, don't beat yourself up. This is not a moment for self-defeat, but for recalibration. Remember, your financial plan is not set in stone. It's a dynamic tool that should adapt to your life and your circumstances. Got a raise? Awesome. You might want to increase your savings or investment contribution. Counted a significant expense? No problem. You might need to adjust your budget or dip into your emergency fund. What matters is that you recognize these changes and adjust accordingly. So, to make tracking your progress easier, consider using budgeting tools or personal finance apps. It's many of them, and some are more difficult than others. They can provide visual representations of your progress and highlight areas that need attention. And above all, celebrate your wins, no matter how small. Every step forward is a step toward your financial goals. So keep going, keep growing, and remember, you've got this. All right? So let's switch gears a little and talk about something you might not immediately associate with financial planning: your family. Yeah, you heard it right. Your family plays an integral role in your financial planning and decision making. And here's why. First off, remember that your financial decisions do not just impact you. They have ripple effect on your family, whether that's your spouse, your children, or even your parents. For instance, buying a new home, saving for your children's college education, or supporting aging parents are all financial decisions that are deeply interwoven with your family life. Now, imagine you are on a boat. You're the captain, sure, but every person on that boat has a role to play. It's the same thing with your family and financial planning. Each family member has a role to play, and their understanding, cooperation, and active participation can be pivotal. For example, your spouse can be a co-navigator, working with you to set financial goals and strategies. Your children, on the other hand, can be crew members, learning about money management from an early age, understanding the family's financial situation, and contributing where they can, even if it's just saving a portion of their allowance. And let's not forget, when you involve your family in financial planning, you are not just working toward a stronger financial future, You are also instilling valuable money management skills in your children, fostering transparency and trust with your spouse, and ensuring that everyone is on the same page. So invite your family into your financial planning process. Have open and honest discussions about money. Make financial decisions together. And remember, it is not just about the money. It's about strengthening your family bond, teaching valuable life skills, and working together toward shared goals. And that's, my friend, is priceless. Now that we have established a foundation with a solid financial plan, it's time to dive into the exciting world of investment. You see, it's not just about saving, it's about making your money work for you. And that's where investing comes in. That leads us to the third and last point of today's episode: exploring investment strategies for success. In this segment, we are going to take a plunge into the ocean of investments. Think of it like this: we built our boat with a financial plan, and now we are ready to set sail into the open seas. But to ensure our journey is successful, we need a good navigation system. And that's exactly what an investment strategy is. It guides us through the highs and the lows, helping us stay on course toward our financial goals. Whether you're a novice investor or someone with a bit more experience, understanding the different strategies available to you and how to navigate the investment world are key to financial success. So let's get on this enlightening journey of financial growth and prosperity. The value of investment in financial planning cannot be understated. Think of it this way: if your financial plan is your roadmap to success, investing is like the vehicle that's going to get you there. So without investment, your money stays stagnant. Sure, you might be saving, but is that money growing? With inflation chewing at your savings buying power every day, it is crucial to put your money into action. Investing offers the opportunity not just to maintain, but to grow your wealth, to outpace inflation, and to build a stronger financial future. So whether you are investing in stocks, bonds, real estate, cryptos, or even a small business, the growth potential is significant. Your invested money works as a silent partner, earning you more as it grows. It is like having a team of worker bees out there gathering honey on your behalf while you focus on other aspects of your life. But remember, with every investment comes risks. That's where the need for understanding and strategies comes in. And that's exactly what we are going to look at next. So are you ready to turn your saving into a growing, dynamic powerhouse? So let's get started. First, let's look at diversification. I'm sure you heard the saying, don't put all your eggs in one basket. That's essentially what diversification is all about. By spreading your investment across a variety of assets, like stocks, bonds, real estate, and cryptos, you reduce the risk of a single asset's poor performance, significantly impacting your portfolio. It's a strategy designed to smooth out the ups and downs in your investment journey. Then we have value investing. This strategy involves seeking out stocks that appear to be undervalued by the market. So think of it as a bargain shopping for investments. The idea is to buy these bargain stocks and hold onto them until their price reflects their true value. It is a strategy favored by investing giants like Warren Buffett, but it requires a good deal of research and a willingness to go against the grain. Speaking of stocks, let's talk about dividend reinvestment plans, or what they call DRIPs. They allow investors to reinvest their dividend into more shares of the stock, often at no additional cost. It's a strategy that harnesses the power of compounding, enabling you to grow your investment exponentially over time. And finally, there is investing in index funds. Index funds aim to mirror the performance of a specific market index, such as the SP 500, as an example. It's a passive investment strategy, meaning it requires less active management. So, what are the benefits, you might ask? Lower costs and the potential for reliable long-term returns. As you can see, there's a wide range of strategies, each with its unique flavor. And the best part, you don't have to choose just one. You can mix and match these strategies, tailoring them to suit your financial palette. Go on, take a bite and savor the taste of financial growth. Now, let's look a little bit deeper, because with every investment strategy, just like a seesaw, there are ups and downs. It's not all sunshine and roses, nor is it a relentless storm. So let's peel back the layers and take a closer look at risks and rewards of each strategy we just discussed. Let's start with diversification. The major benefit is it spreads your risk. So if one sector tanks, you've got others to cushion the fall. However, the downside is that it can limit your gains because you are not placing a concentrated bet in one sector or stock. It's like going to an all-you-can-eat buffet. You get a sample, a bit of everything, but you may not get to savor your favorite dish as much as you'd like. Let's look at value investing. The upside here is significant. If your research pays off and the market corrects, you could stand to make a healthy profit. But the risks, value traps, okay, sometimes it's cheap for a reason and the price never recovers. It's akin to finding a discounted designer jacket only to realize it's gone out of style. Now, dividend reinvestment plan. The advantage of DRIPs is the magic of compounding, the ability to earn returns on your returns, which can seriously supercharge your investment growth. The risk, however, lies in the fact that you are continually investing in one company. If that company runs into trouble, so could your portfolio. Imagine it like continually adding bricks to one side of your scale. Eventually, it may tip over if you don't balance it out. And lastly, index funds. These provide broad market exposure and tend to have lower fees, making them an affordable way to invest. So, what is the downside of index funds? You are tied to the performance of the market. If the market dies, so does your investment. It's like being on a roller coaster. You are in for the ride, whether it's thrilling or a little bit too scary. So remember, in the world of investing, it's all about balancing risks and rewards. Understanding the intricacies of each strategy allows you to make informed decisions that align with your goals and risk tolerance. And most importantly, no matter what strategy you choose, stay the course and keep your eyes on the prize. You've got this, okay? So now we've got a good grasp of the different investment strategies and their risks and benefits. So now let's talk about the $1 million question. How do you choose the right one for you? Remember, your money is a tool. And just like choosing the right tool for a job, you need to pick the right investment strategy for your financial goals and risk tolerance. You must start with self reflection. It is key. Are you a risk taker, ready to ride the highs and lows of the stock market with a grin? Or do you prefer a slower, steadier approach to wealth building? There is no right or wrong answer, but being honest with yourself about your risk tolerance is crucial in shaping your investment strategies. It's like deciding if you are going for a thrilling roller coaster ride or a leisurely carousel spin. So neither is better than the other. It's all about what suits you best. Next up, consider your financial goals. Are you investing for a down payment on a house, your retirement, or your child's college education? The timeline for your goal can significantly influence the investment strategy you choose. So if you need the money in a few years, you might lean towards safer investment. But if you are looking decades ahead, you might be willing to take on more risks for potentially greater returns. It's like planning a road trip. Okay, the distance and destination will influence whether you take the scenic route or the highway. And lastly, never forget to diversify. Even if you find an investment strategy you love, don't put all your eggs in one basket. A diverse portfolio can help you weather the storms of market volatility and mitigate risks. Picture it as a well-balanced meal. You wouldn't just eat potatoes, right? You need a bit of everything to nourish yourself properly. So navigating the complex world of investing can be intimidating. But remember, it's your journey. So by understanding your risk tolerance, keeping your financial goals in sight, and diversifying your investments, you can chart a path that leads to financial success. You are the captain of your financial ship. So set your course and sail toward your financial horizons. You've got this. And as we start to wrap up this journey through the complex world of money, we've covered some significant ground. We've learned the basics of money, how to craft a solid financial plan, and we dove deep into the existing realm of investment strategies. But before we end, let's take a moment to tie all these threads together, summarizing and reflecting on the key takeaways. So let's transition into our concluding segment, where I will summarize the lessons learned and look forward to our future financial endeavors. And there we have it. Folks, I talked about financial literacy, the fundamental basics, the immense importance of understanding how money works, budgeting responsibly, and within our means. I delved into investment options and even touched on the exhilarating yet volatile world of cryptocurrencies. Taxes, too, aren't something to forget, an essential cog in the wheel of our financial planning. I then put on my architect hat and talked about the necessity of having a sturdy financial plan, a plan that begins with a clear evaluation of your current financial status, setting up an emergency fund, and realistic financial goals. Remember, it's not just about setting these goals, but creating the strategies to achieve them. And yes, I mentioned that your financial journey might need some rerouting along the way. So you must keep tracking progress, adjusting as needed, and keeping your family looped in with your financial decisions. I also address investment strategies and talked about diversification, value investing, dividend reinvestment plan or DRIPs, and index funds. Each has its risks and benefits. The key is choosing the right strategy, one that aligns with your financial goals and risk tolerance. So as I wrap up this episode, remember that this journey, just like any other, begins with a single step. With the knowledge we've covered today, you are now better equipped to navigate this complex world of money. So let's continue to learn, grow, and make wise financial decisions that will pave the way for a secure and prosperous future. With that, my friends, it's time to tie everything together. Over the course of this episode, we've been on an intricate journey discussing all things money. We've addressed the importance of understanding, planning, and investing to master our personal finances. Here is something you might want to take to heart. Understanding money is not just about knowing where to put your hard-earned cash and how to grow it. It's about realizing how financial decisions ripple through all aspects of our lives. It's about making decisions today that will pay dividends tomorrow. Planning, on the other hand, provides us with a roadmap to our financial goals. It requires us to assess our current standing honestly, set up safety nets like an emergency fund, and strategically align our efforts toward achieving those future dreams. Remember, your financial plan is your personalized blueprint for your financial freedom. What about investing? It is where understanding and planning converge to create magic. It's not a one-size-fits-all game. It requires a deep understanding of various strategies and picking the one that best suits your goals and risk tolerance. Investing smartly is a key that opens the door to wealth accumulation. So to sum it up, mastering personal finances is not an overnight feat. It's a journey filled with knowledge accumulation, strategic planning, and calculated risks. And as I close this episode, remember, we are on this journey together. So let's continue to unravel the complexities of the world of money, one step at a time. And now it's over to you. Yes, you. With the wealth of knowledge I unearthed today, it's time to put it into practice. You are not just here to absorb information, you are here to apply it, to see it transform your life and your financial future. Think of all the things I talked about: understanding money, crafting a solid financial plan, and choosing an investment strategy. Imagine the power that you hold right now at this very moment. The power to change your financial narrative and chart a new course. Remember, it's not just about knowing, it's about doing. I challenge you to take this insight and weave them into your financial planning. So start small, perhaps by reviewing your spending habits or setting up an emergency fund. Then move on to set realistic goals and slowly step into the investment world. Every little step will bring you closer to financial stability, independence, and success. There will be ups and downs, of course, but remember that the road to financial mastery is paved with perseverance, determination, and a whole lot of learning. So let's make your money work for you. As we end today's enlightening journey through the labyrinth of personal finance, I want you to hold on to this thought: managing money, creating a solid financial plan, and understanding investment. It may all seem overwhelming at first, right? But remember, it is not about taking big leaps all at once. It's about taking small, measured steps consistently toward your financial goals. Every penny saved, every budget planned, and every informed investment counts in the grand scheme of things. So stay curious, stay informed, and don't shy away from asking questions or seeking professional advice. Because in the end, mastering the complex world of money is all about equipping yourself with knowledge, making informed decisions, and learning from your experiences. It may sound like a broken record, but keep this in mind as we continue our journey in the upcoming episodes. Until then, stay financially savvy. And as you know, I like to end my show with inspiring words, and here they are. Money is a tool. Understand it, plan with it, invest it wisely, and you will master the art of financial freedom. I just want to take a moment to thank each one of you for tuning in today. Your time, interest, and trust are deeply appreciated. I hope you found this episode enlightening and useful in your journey to navigate the complex world of money. Remember, every step you take toward financial literacy is a step toward financial freedom. And together, we will build a world where financial independence is within every woman's reach. Share this podcast, ignite a dialogue, and make a difference. Check out the link in the description to learn more, and let's keep this ball rolling. Stay tuned for more live shows and podcasts covering a wide range of financial wellness topics. I will see you next week, Thursday, at 7 p.m. Pacific Standard Time, 8 p.m. Mountain Time, 9 p.m. Central Time, 10 p.m. Eastern Time, 11 p.m. Atlantic Time, and noon Friday, Brisbane, Australia time. Thank you for being here today on the Merging Life and Money Show. I am your host, Marie-Jo Cesar. I will be back again next week. Until then, continue merging life and money.